My guest today is Ryan. Ryan is head of product at Stabull Finance, a stablecoin and tokenized real-world asset DEX on Ethereum and Polygon, I believe. Welcome to the show, Ryan.
Hey there, Andy. Thanks for having me.
It is a pleasure. Let's do what we do at the beginning of the show, Ryan. It'd be super cool if you could just give us, a little bit of background, just anything you're happy to share in terms of your personal and professional story. What have you been doing in the lead up to joining the team at Stabull Finance?
Cool. Yeah. I've been in crypto for about 6 years. Starting out at the one and only Brave New Coin, as in data science, and moving into product, helping to build the API and index infrastructure for our market data platform. And joined Stabull almost a year ago now, working on their AMM design. That's the pricing curve, and how we can optimize liquidity for stablecoins, in particular local stablecoins, and then building out the DApp and the smart contract infrastructure that goes with it.
Very cool, very cool. So, it's an interesting time for stablecoins in various jurisdictions around the world, particularly the US. Maybe we'll come back to that in a second. Do you want to just, at the top of the show here, Ryan, just explain what Stabull Finance is and, how you guys kind of position yourself in the DEX market, what your point of difference is, what is the problem you're trying to solve, etc.
Yeah, let's do that. Stabull is a DEX or an AMM, automated market maker, which is optimized for stablecoins and RWAs, real world assets. So it's kind of like the Uniswap for stablecoins and RWAs. And it was built in a way to optimize for those asset types. The main point of difference, I guess from my perspective, is that DEXs like Uniswap and Curve and PancakeSwap, they're very much generalized AMMs. They're built for a large range of different crypto assets, whether that be meme coins or sometimes stable coins or any type of crypto asset. But the thing with stable coins and RWAs, stablecoins being, I guess, a type of RWA, is that a lot of their price discovery occurs off-chain, which is unlike other crypto assets. And that kind of key piece of information is almost forgotten by generalized AMMs. So what Stabull is it uses oracles, off-chain oracles, like the price of the euro to USD or the price of gold to USD. It brings that on-chain, and it uses that to drive its AMM and pricing curve. Specifically, it distributes liquidity around those oracles so that at any point when you trade, you might want to swap your USDC for an NZD stablecoin or a Brazilian stablecoin. You're getting a price that's a lot closer to the real world price.
Yeah. All right. Thank you for that, Ryan. Yeah, it's interesting. The thing about stablecoins is, however many years we are now into, the cryptocurrency journey since let's say the publication of the Bitcoin white paper, and the two kind of use cases that have found, really, really strong product market fit successfully with a large curve of adoption, if you like, as Bitcoin as digital gold, perhaps, and, stable coins as, peer-to-peer easy payments, the way Bitcoin was first described. And the adoption of stable coins is just growing faster and faster all the time. I think you're based in the US, Ryan. Particularly interesting what's happening in the US at the moment with, various government entities and, I guess, members of the new administration are really looking at stable coins and stablecoin legislation.
Yeah, definitely. As we've seen over the last few months, a softer regulatory stance, you could say. Very encouraging for the industry as a whole. And I think we can see from a lot of big institutions pushing even further into the stablecoin space. I think that's a direct result of that kind of softer stance from the US administration. I guess more recently, over the last couple of weeks, there's been a bit of news about the stablecoin bill in the US possibly not being too great for yield-bearing stablecoins, particularly US dollar yield-bearing stablecoins. So that was kind of an interesting thing to come out of that. A lot of commentary is around how they compete with like dollar deposits and bank accounts, and that could be a potential reason why the administration or the bill that's going through Congress right now is pointing at those in particular, whereas they seem pretty bullish on non-yield bearing stablecoins. I think the other interesting areas from our perspective being focused on non-USD stablecoins is, regulation and regulatory trends outside of the US for stablecoins. I mean, it is not just the US. Often the US sets a lot of like the scene for a lot of financial regulation, but there's a lot of geographies like Singapore and even Europe that have been kind of have done this sooner than the US. We saw this with the MiCA regulations last year that came out. And the interesting thing that we're seeing is that these countries, they are as well softening in their like outlook of stablecoins, but they do seem to be kind of favoring their own local stablecoins, and that's often due to like traditional concerns about capital flight and dollarization that any country deals with. They don't want to just open the doors to USD stablecoins and see everyone flock to that stablecoin. So yeah, the regulations like MiCA, we've seen them put in like kind of volume controls on the amount of USD stablecoins that can be traded per day. And then similarly in Brazil, I think there's regulation that's being looked at right now that would actually ban the withdrawal of foreign stablecoins, USD stablecoins being withdrawn to self-custodial wallets. So I think it's interesting that around the world, we're seeing like favorable stablecoin regulations, but within this, there's still kind of the traditional capital control that governments have always done to prevent their dollar being devalued or their currency being devalued. We're still seeing that in a stablecoin focus. So it'll be interesting to see how that pans out for other countries.
Yeah, very, very much so, Ryan. So if Stabull is the home then for non-USD fiat-backed stablecoins, and of course, eventually, potentially tokenized real-world assets, just explain again why it's important for anyone who wants to use Stabull Finance to have access to non-USD stablecoins, because that's kind of one of the key differentiations of what Stabull does, right?
Yeah, I mean, to take a step back, the kind of discussion is like, what is the use of local or non-USD stablecoins? So we all know how big USD stablecoins have become. They kind of dominate 99% of the stablecoin market. We have seen some like local stablecoins that have done quite well recently, like Circle's Euro C, and there's like the Brazilian stablecoin BRZ has done well in market cap terms. But yeah, the question is like, if USD stablecoins are doing so well and they have found a product market fit, what is the use for these local stablecoins? And I think I guess the traditional answer or the main answer that's given is like remittance or cross-border payments, and that is still a big one. how remittance currently works without blockchain is we've all probably heard of the Swift payments or the correspondent banking system, where you want to send a payment from the US to the Philippines. You're likely going through 3, 4, 5 different correspondent banks, each with their own risk systems they have to push it through, which adds time and fees, and eventually ending up with an expensive and like long duration transfer. Now, what stablecoins add to that is it's a global system. There's no siloed banking systems or the need to pass money around between different correspondent banks around the world. But it still raises the question of, is there a use for non-USD stablecoins in that system? Because we could just be using USD stablecoins, and I think the answer is when there's use cases for like inside those local countries. Can you pay for things? Can you receive your salary? Can you pay for your rent? Can you pay your employees with stablecoins? And those are the type of use cases that we've slowly over the last 5 years, but very quickly over the last year, seeing projects answer. There's a lot more like Web3 projects that are answering those use cases. And I think soon enough, a lot of them are kind of also USD dominated at the moment, but very soon we're going to see that they kind of outgrow the USD kind of market, and they're going to have to answer those demand from other countries. So I think payments, like domestic payments, paying for goods, P2P payments, cards, payroll, those are all like kind of use cases that will add to the demand of local stablecoins. And then another one that we're kind of answering with our UI is like the trading FX and commodities use case. Traditionally, that's been a market that's traded only really by big companies and institutions, particularly the FX industry that's almost exclusively dominated by big institutions that are globally based. So it's often hard for smaller businesses or even like individual traders to get access to FX markets. So we do think that like being able to trade those things, or at least get exposure to those assets, is made almost easier on chain. The other thing, I guess, related to trading is that we often see for, I guess, crypto traders, when the market goes down or there's a downturn in the markets, that stable coins, there's a lot of like supply minted, and that's showing that when crypto is down, people are selling off their crypto and moving into stable coins. And we think now that there's more options for these like cash-based portfolio rather than just USD. There's tokenized Japanese yen, there's tokenized Swiss francs, there's tokenized gold, there's tokenized silver. All of these assets are traditionally what a like TradFi trader would use as their like safe haven portfolio when there's a downturn in markets. And it's now those assets are able to be accessed by crypto traders as well.
Yeah, very well said, Ryan. And of course, hence the term stabled up, which you'll see if there's a market downturn and you want to just be sitting in cash effectively on the sidelines. You're really just sitting in stables these days. But I see, Ryan, on the website, yeah, you guys, I believe it's launching today. And I'm going to publish this podcast today, so in a few hours after we speak. But yeah, there's a Stabull IEO that's launching today. Just run us through exactly what's going on there. What are the details of the Stabull IEO?
Yeah, so we're our public sale for our governance token is starting today. at 11 o'clock UTC on Probit Exchange. There'll be 3 rounds of that. So this is round 1 over the next 2 weeks, and then followed by our token launch event, which will involve a listing on an exchange, as well as the release of our various airdrop campaigns, as well as the start of our liquidity mining program. And that kind of leads in what the purpose of the token is. Of course, it'll be used for governance. So participants in the protocol can propose and vote on different ecosystem proposals, what chains to move to, what new assets or pools to launch. But importantly, it does also power our liquidity mining program, which means that if you are a liquidity provider on Stabull, which means that you have a USD stablecoin, USDC, and you have a non-USD stablecoin like NZDS or BRZ, which you can obviously swap for on Stabull. You're depositing those in one of our pools and becoming a liquidity provider. And then you're earning a yield on that position, which is earned in fees from people swapping through that pool, but you're also earning a stable token reward for being a liquidity provider. So that's where the token comes in. So liquidity providers will be earning stable tokens every block that they're a liquidity provider for. And then they can also use that stable token to vote on which pools should earn the greatest bonus rewards, basically. So in effect, you kind of get a system like Curve or various other protocols that use vote escrow tokens, where the community, it's basically decentralized the yield rates. So if a lot of people are voting on the BRZ pool, for example, then that APR will be a lot higher than the other pools.
Got it. And I'll put a link in the show notes to the link on Probit. But just Ryan, explain who is able to participate in the IEO, what the benefits are for getting in early, anything like that, any other details to cover off there?
Yeah, so in terms of getting in early, the round 1 has a significant discount compared to the other rounds. So that's where you'll get the best price on the stable token. You'll find all the information about who can participate on the site, but generally not allowing US participants and a few other countries as well. But it is easy enough to join. You don't have to KYC, as far as I know. And yeah, I think it's pretty clear to most people how big the size of the stablecoin market is. And we're tackling a small but important part of that, which is the basically bringing the FX market on chain. We think local stablecoins are going to compete with USD stablecoins in a big way, and for things like cross-border payments, for example, someone in Germany buying a ChatGPT subscription in the US, we think that stablecoins, and in particular being able to swap between your local stablecoin and a USD stablecoin, is going to be a very high volume industry. And Stabull is positioning itself to be kind of the primary liquidity layer for that type of transaction between different currency stablecoins and different commodity stablecoins on chain. So I think this is a great opportunity to get in early and get exposure to kind of the stablecoin infrastructure of the future, basically.
I like it. Very, very well said. Thank you, Ryan. And again, listeners, the link is in the show notes to the Stabull IEO on Probit. And that will be live. But on just day 1 as you listen to this. So I guess be useful, Ryan, also just to understand, maybe just run us quickly through some of the existing stablecoin pairs that are available for swapping or liquidity pools that are on Stable at present.
Cool. Yeah. So as you said, we're currently on Polygon and Ethereum, but we are in the process of developing our base integration. So we'll be launching on base chain very soon. The pools we currently have are, as I mentioned, Stasis Euro, which is a pretty big stable coin. NZDS, which is an NZD stablecoin issued by Tekament, TRYB, which is a bi-lira Turkish lira stablecoin. We've also got Singapore stablecoin, Brazilian. We do have a couple of USD pairs. That just makes it easier for people that don't have USDC, which is our quote asset for all our pools. If you have USDT or DAI, you can still participate in Stable because we have those pools, as well as currently our only tokenized commodity is Pax Gold, but that's a reasonably high volume pool, as well as a Philippine peso and a Colombian stable coin. We also have it on Ethereum. We have Japanese yen stable coin. And yeah, that kind of rounds it out for now. We are hoping to add a few more in the next month, including a South African stablecoin potentially. And we are obviously working hard to unearth the real-world assets that are coming on chain now. They have kind of been a bit later than stablecoins. I think because it's almost a little bit harder to manage reserves for RWAs or tokenized commodities, should I say. But yeah, we are seeing a big inflow of tokenized commodities come on chain. And we hope to be kind of the first and biggest market for those.
Very nice. Very nice. All right. Well, look, Ryan, as we start to finish up this part of the podcast, yeah, just anything else that we should know about Stabull Finance, like, I don't know, anything in terms of, yeah, like differences from the likes of Uniswap and Curve, maybe touch on any products, services, features that you guys are working on that should be coming down the product pipeline in the near future. Yeah, what else is going on?
Yeah, I'll touch on the pipeline quickly first. I mean, we're working on stuff all the time. This week, we're launching our new Wallet Connect tool. So it'll be a lot easier to connect to our DApp using a range of different wallets. We're just releasing some updates to our UI. So it'll be easier to identify which currency each stablecoin is, as well as price changes on stablecoins. And yeah, as I said, we're very excited about launching on Base. We have looked at a lot of different chains. We didn't want to tie up too many dev resources on just launching on any chain. So we were very particular about those that had a stablecoin supply and volume existing, and B, a chain that kind of showed a motivation for local stablecoins in particular. And Base has really shown that recently. They've had about 5 different non-USD stablecoins launch on Base in the last month or two, and it's kind of part of their roadmap is to deploy, I think, 30 different currencies on chain on Base. So they do seem very aligned with us, or I guess our goals in terms of bringing the world on chain, and bringing the FX market on chain with it. And that does kind of bring another point to the reason why local stablecoins are important for, I guess, bringing a greater user base on chain, is that a lot of times, well, for one, a stablecoin of your own currency, I think, is a lot more almost tangible or understandable for new users, rather than needing to understand Bitcoin or Ethereum, it's almost an easy stepping stone to understand a on-chain equivalent for your Japanese yen or your NZD. The other thing is, for builders that aren't based in the US, a local stablecoin can be very important for them as well. So yeah, excited about Base. I mean, I touched on it before in terms of our difference, but I guess the main thing that's important in using an Oracle informed AMM is, yeah, as I mentioned, a stablecoin price discovery occurs off chain as opposed to other crypto assets. And platforms like Uniswap and other generalized AMMs, they're set up so that price only really moves when an arbitrager moves it. They're almost passive in that sense. And you'll quite often see for local stablecoin pairs on Uniswap or other AMMs that their price is quite stale. If the off-chain FX market for, let's say, the Turkish lira is volatile and moving a lot, on Uniswap, those changes aren't as big, and it's the price is flat for a long time, and B, it's kind of lagged. And so that's kind of Stable's advantage, is that it's not like waiting for arbitrages to have to pull the price in line, not just in line with other DeFi protocols, but in line with off-chain prices, which is a complex process. It actually uses these off-chain oracles to center liquidity dynamically around the oracle, which means that prices are more up to date and real time, closer to the off-chain price. But it also means we don't allow this like gap, you could say, for arbitrageurs to take profit. And arbitrageurs taking that profit is kind of the reason why impermanent loss becomes a thing in DEXs. So it helps with our capital efficiency as well for LPs. And by centering the liquidity where trading is most likely to happen, it also means that liquidity stays active for a longer amount of time. Quite often in a kind of these V1 AMMs, liquidity was spread across the whole pricing curve. So only 5% of the liquidity is actually being used at any one time, and that results in lower yields and lower APR. Whereas for Stable, your yield is very much centered around the Oracle price where trading is happening, so that your liquidity is active for like all the trades.
Yes, indeed. All right. Well, just quickly shout out the Stabull Finance website, properties, socials, apps, anything like that. What should people do if they're not also already familiar, Ryan? Yeah, what should they do? Where should they go? And of course, as I said, listeners, the link to the IEO is in the show notes. Easiest way to get there. I think you can get there from the Stabull Finance website as well, though, right?
Yeah, definitely. I would say if you're interested in keeping up with Stabull, definitely follow us on Twitter at Stabull, Stabull Finance. If you're even more interested and want to get involved and have questions or have feedback, then join us on our Discord channel or Telegram. Our website is stabull.finance, and if you're ready to start LPing or have some USDC and want to swap for your local stablecoin or any local stablecoin, then I would encourage you to do that. Our app is live at app.stabull.finance. Yeah, thank you a lot. Thanks a lot for having me, Andy.
Awesome. It was a pleasure, Ryan, but we're not quite finished. As you may or may not know, I do like to finish each podcast with a very quick round of crypto conversation hot takes. Ryan, are you up for it?
Sure.
Just going to run some questions at you, Ryan. Just want you to give me your honest answers. hot take style if you like. Let's see what you have to say. Question 1 for you, Ryan, is where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
A lot closer to the multi-chain opportunist.
Yeah, fair enough. Okay, well, Ryan, what would you say is your firmest conviction crypto opinion?
I mean, as you can probably tell, I'm very much into the stable coin side of things than anything else. So I do firmly feel like stable coins will revolutionize particularly the payment rail space. I think when you're buying things online, e-commerce, in the next 5 years, a lot of it will be going through stable coins.
Yeah, I very much agree. Sci-fi author William Gibson famously said that the future is already here. It's just not evenly distributed. With that in mind, Ryan, can you think of an example of the future being here right now, but most people aren't aware of it?
Hate to give a similar answer, but some merchants that use Stripe as a payment rail in the US, you can actually send them USDC for purchasing things through a merchant account. So some people don't know that, and some merchants probably don't know that they can activate that on their Stripe account.
Yes, indeed. All right. And look, let's keep it simple. Final question for you, Ryan, is what is your favorite science fiction book, film, or TV show?
Oh, I have read a few science fiction books recently, but they all have such abstract and one-word names.
Yeah.
I mean, just because it's recent, I did enjoy the June movie series. Probably the second one the most. Didn't so much like the TV series that came out on HBO, but yeah, like the movies. I think more than I like the books.
Yeah, I'm with you. I haven't read the books, I will admit, but again, yeah, you're exactly right. Second film, incredible cinematic experience. Probably one of the better cinematic experiences of the last decade, I reckon. Didn't watch the TV show. Yeah, I heard it's not as good. So yeah, stick with the films. And that, Ryan, brings us to the end of the show. So thank you so much for coming and spending some time with us today. Again, just to close it out, please do shout out again the Stabull Finance websites, socials, anything like that. Go for gold.
Cool. Yeah, Stabull.finance is our website. Our DApp is app.stabull.finance, and our Twitter is @Stabull Finance.
Awesome. Thank you so much, Ryan. All the best, and bye for now.
Thank you.